Welcome back. You're watching Stock Picks, and joining us to unpack Webuycars, Shoprite and Bidcorp is Faheema Adia from Momentum Securities. Faheema, always a pleasure. Good afternoon.
Afternoon, Alessandra. Thanks for having me.
Brilliant. Thank you for being with us. Before we get into your stocks, is there a reason why you chose these? Is it just stocks you like? Is there a theme going on?
Yeah, so I think the theme for me has been just looking at some attractive, undervalued South African stocks that have been neglected in the past few months. And as we know, the US economy hasn't been slowing as quickly as we had hoped, which means interest rates, they are likely to remain higher for longer. And we're seeing a similar case in South Africa, given the headwinds to inflation coming off further this year, as we see increases in the fuel price, also in tariffs. So I just think these stocks I've chosen are pretty well positioned, and given their defensive nature, they're more likely, I think, to fare better in the next few months, given all the uncertainties we're seeing globally.
Let's start with a new kid on the block, Webuycars. This was one of one of the most successful listings we've seen in a while. That stock price still holding up above what was listed.
Yes, yeah. So we've seen that one make its debut this month on the JSE. It opened at about 20 Rand when it listed. It was above the pre-listing price of about 18 Rand. So that does show there's been quite a bit of consumer optimism when it actually listed on the day. Since then, it's been pretty stable at around that 20 Rand mark. But yeah, we are expecting good things on this one. We think it's quite well positioned given the difficult environment we're in South Africa. We're seeing consumers' preference to purchasing used vehicles instead of more expensive imported cars. And there's quite a significant potential for growth. Management is expecting Webuycars to double its 10 to 12% market share by 2028. And there's been pretty strong momentum in 2024 on this one. And we've seen quite a good recovery since the beginning of last year.
What's also interesting, I think, about this one is that this is a thesis that holds even if interest rates remain high, just because of just how expensive new cars are.
Exactly. And I mean, with the Rand as weak as it is, I think the SA consumer is really in a position now where they almost have no choice but to look at the used vehicle market, given the huge pricing difference between a used vehicle and a new vehicle. And I think what we also like about Webuycars is it has quite a unique competitive advantage in that it's got those AI capabilities and proprietary technology that enables it to price the cars just right for the consumer. And they're also able to sell the cars quickly in this way and get paid almost immediately for their sales. So I think it's just a business model that really works for the SA consumer.
Very interesting one indeed, Faheema. I just want to, before we move away from it, with that a price at around 19 Rand, a good place to go and ride it out for the long term?
Yes, I definitely think it's a buy for the long term. So if we look at the PE, it's trading up at a forward PE of about 9 times, I would say. And if we compare it to its competitors, given its unique business model, I wouldn't say that there is an exact competitor that does the same thing that it does. The closest would probably be Motus and CMH, but if we did have to compare it to those two, we'd say there's just a lot more growth expected to come from Webuycars, and we do expect them to take some market share from the likes of Motus and CMH in the next few years. And like we said, they're not exposed to the depreciating Rand because they're selling used vehicles, and also not to that volatile rental market. So definitely better positioned, I think, for growth and for better share price performance in the next few years.
Brilliant. Certainly one worth watching there. Let's talk about one of the oldest kids on the block, but I think still just a fascinatingly brilliant company here, Shoprite. Faheema, why are you loving this counter today?
Yeah, so of course, like you said, it's been around for a very long time. It's the leading supermarket chain in the country. And we've just seen it continue to take market share from its rivals, including Pick n Pay, Spar, Woolies. I don't think there's anywhere you can go without seeing one of those 60/60 delivery bikes on the road. And that business has obviously also been very profitable for Shoprite. So if we look at the share price performance this year, Nolitando, it has been down quite a bit by about 15%. So I think that's basically been, on the back of the expectations of rate cuts coming, which made other sectors like banks look more attractive. And there were also concerns about some volume declines in the grocery business. But I think now that we're seeing, the rate cuts get pushed out to later on in the year, and also food inflation starting to come off more significantly, I think Shoprite will probably rebound in the next few weeks as the prospects for the business will start to improve as we see a consumer that's under less pressure from high food inflation.
One thing I'm keen to get your thoughts on, Faheema, when it comes to Shoprite is just how far gone it is past its competitors, and if there's, ever a time when the likes of Pick n Pay can recover and catch up again, or has this, business really just advanced way past its peers?
Yeah, no, I think it's quite well ahead of its peers. If we look at some of their competitors, like you mentioned, Pick n Pay is obviously having quite a tough time. They've had to do a rights issue. They're in the process of turning that business around, but it's going to take a long time to do that. And then if we looked at SPAR, SPAR has had significant issues with the implementation of its SAP system, which cost the business a lot of money. It's also struggling in some of its European operations, looking to exit the likes of Poland. I think Woolies is doing relatively okay, but they still need to see some further recovery in their fashion beauty business. But yeah, I think Shoprite is definitely the one that has the lead there, and will probably continue to take market share in time.
I must also ask you about, Peter Engelbrecht as a leader here, because one thing we also know is that owning a supermarket like Shoprite is no longer just about buying and selling the best goods here. There's tech in there, there's supply chain in there. It really is quite a complex network that's been built there to ensure that stocks are up and they can offer the cheapest prices here. Is this the kind of specialty that Peter Engelbrecht and his team, I guess, bring to Shoprite here, speaking to the formidable leadership that's behind this giant?
Yes, no, definitely. I think his leadership has definitely been the driving factor behind Shoprite's success in the past few years. He's, like you said, just really taken a focus on diversifying the business model so that it is attractive to the different markets, from the low income market to the upper end of the market. It's very competitive when it comes to its pricing. It's got very good promotional activities, and its platform 60/60 is also doing quite well. They continue to invest in that to improve its offerings to consumers. And just focusing on continuing to expand that business to try to take more market share from other areas. So, for example, they've also entered into now the pharmacy side of the business. There's petting. There's even a little bit of furniture in the group. I think it's a pretty well-run business, and of course, it's got superior leadership there coming from him.
It is a very interesting one, indeed. Let's move on now to speak about Bidcorp, also a company that I really enjoy. South African listed, but hardly South African facing.
Yeah, no, exactly. It's just got such a big footprint now and such diversity. If we look at it, I saw it's got now a presence in 35 countries, so that ranges from Europe to the UK, Australia. And it's just had such good growth and such a good track record, which is why we really like this one. If we look at the earnings CAGR growth in the past 5 years, it's been about 16%. And at the moment, it's trading on a pretty attractive forward PE in our view of about 16 times. If we look at the interim results for the half year ended December, that was also pretty strong. We saw revenue and trading profit up more than 20%, HEPS increased by 18%, and it also has a very strong balance sheet, which provides some conservatism and safety for the business as well. And we just like that it's continuously focusing on organic growth and also on acquisitive opportunities there.
Let's speak about that. I think the CEO did say that they are out on the prowl for acquisitions here. Faheema, what kind of acquisitions could a company like Bidcorp bring on board?
So I think it's basically just everything food related that you can think of, Nolitando. So they've got a presence in so many different industries, ranging from hospitality to institutional to catering, the retail sector. So It goes all the way from, delivering fresh ingredients to the consumer, to final prepared meals in the hospitality sector. So there's just so many options for them to grow into different areas and also to acquire businesses in those spaces. And they've just been very successful at doing that. And I think what also really makes this business model work, Nolutando, is it's a very decentralized model, which means that they allow each country to run pretty independently, taking the local interests into account. And that gives them that local autonomy that they need to make decision-making quite quickly. They also focus on high margin products and very high value specialized products, which also helps the bottom line quite a bit.
I want to speak about margins because also what we're seeing now is, of course, food price inflation falling quite a bit. That means that margins at Bidcorp should be able to increase to maintain themselves, or maybe even increase even better.
Yes, we are seeing, fortunately, food inflation is coming off. I mean, if we look at South Africa in particular, I was just reading that, last year we saw food inflation peak at 14%, and it's now down to about 4.9% year on year last month, which is a dramatic decline. And obviously very good for the consumer and for your food retailers such as Shoprite and Bidcorp. So yes, I definitely think that's something that both retailers are probably going to start benefiting from as we see food inflation come off.
It is indeed a very interesting one here. I'm also keen just to get your thoughts on what we are seeing with Bidfood South Africa being one of their top performers. That's something you don't expect, do you? And I'm just wondering if after COVID-19, Faheema, the world's relationship with eating out has changed quite a bit. Even with the high inflation, with the high interest rates, we still saw people really happy to go out and eat out. Really speaking to, I think, just a shift in the way that we used to interact with Bidcorp's clients before.
Yeah, definitely. I think, the South African consumer is under a lot more pressure. Particularly since COVID, I think the markets haven't quite recovered in the food industry, the restaurant business, to what it was before. And now with interest rates still high, inflation high, we are seeing consumers try to cut back on luxuries. But I think they're just benefiting in areas where they can, do promotional activity and just focus on more value-add products for the SA consumer, knowing how cash-strapped they are at the moment.
Brilliant. Now, Faheema, for a retail investor sitting at home and for their benefit there, is there a way we could rank these stocks from 1 to 3 for anybody looking to jump in at this point?
Yes, so my first one would be Shoprite. Like I said, that's just because it's that leading grocer in the country and trading at a very attractive price at the moment. I think it's a good opportunity to add to this one. Then after that, I would look at Webuycars. Given its debut on the JSE, I think that there's a lot more upside to come from this one. We're also expecting a lot of growth in the next few years, so expecting pretty strong price performance in the years to come. And lastly, I'd probably look at Bidcorp, just to get some diversity of income and also another solid company that's been doing really well over the past few years.
Brilliant. And in our educational segment today, we have headline risk. Faheema, help us understand this term.
Yes, so headline risk, Nolutando, is basically an ESG-related concept that's used in finance, and it basically refers to the reputational damage that a company can be faced with due to exploitation of local workers in low-cost manufacturing countries if they do decide to outsource manufacturing to those type of countries. So for example, we have seen in the past, the likes of Apple, Nike, and even Samsung get into trouble for this type of thing because they've outsourced production to low-cost countries such as China and South Korea, where labor rights are not always established or respected, and that often can result in exploitation of workers due to things like forced overtime and poor working conditions. So the reputational damage associated with this can be pretty bad for a company, and it ranges from the likes of boycotts of products from consumers to also fines from regulators. So these days, when investors look at a company, they are increasingly taking a look at ESG. And we expect it's going to just continue to become a more prominent factor in the years to come.
It's a very interesting one. Faheema, thank you so much for taking us through it and for joining us on Stock Picks this afternoon. That was Momentum Securities, Faheema Adia with your Tuesday edition of Stock Picks. And that's all from the Business Lunch team this afternoon. We're back tomorrow, same time, same place. Snatty's back with the close at 5:30 this afternoon. But until then, stay tuned for lots more coming up right here on Business Day TV.